Hello and welcome to today's video. It's about finance and the article is written by Maxwell Matama and the headline says VanEck plans to stake 70% of AVAX in new Avalanche ETF filing. VanEck updated its Avalanche ETF filing to stake up to 70% of AVAX with rewards reflected in the fund's net asset value. The main points here is VanEck may stake up to 70% of AVAX in its proposed Avalanche ETF. Coinbase Crypto Services will serve as the fund's initial staking provider. Staking rewards will be allocated to the fund after deducting a 4% fee, and the NAV will be adjusted accordingly. The ETF will be custodied with Avalanche Digital and Coinbase custody. And it says VanEck has taken a new step in crypto-backed ETFs by updating its proposed Avalanche fund, AVAX, to include staking rewards. This move would allow the fund to generate income by staking up to 70% of its AVAX holdings. If approved by the SEC, VanEck would be one of the first US-listed ETFs to combine spot crypto exposure with native token staking yield, reflecting the evolving design with digital asset investment products. It's just the same here. In its amending S1 filing with the US Securities and Exchange Commission, VanEck disclosed that the VAV may stake as much as 70% of its AVAX tokens. The goal is to generate staking rewards that would accumulate to the fund minus a for-service fee paid to its staking provider Coinbase Crypto Services. They always get paid first, of course. The rewards will be reflected in the ETF's net asset value, providing investors with potential yield in addition to AVAX price exposure. This marks a shift in ETF design, as it incorporates the on-chain features of proof-of-stake networks into traditional investment vehicles. Custody and index strategies emphasize security and transparency. VanEck will custody the future fund's AVAX holdings with regulated providers including Anchorage Digital and Coinbase Custody. Both custodians store crypto assets offline in cold wallets, offering secure handling of digital assets under regulatory oversight. The fund will not use leverage or derivatives, which is good. Instead, it will track the price of AVAX through the market vector Avalanche benchmark rate, a custom index built from pricing data on major exchanges. This ensures a reliable price reference for the ETF while maintaining direct exposure to the token spot value. By avoiding derivatives, the fund seeks to simplify its structure and align with SEC expectations for physically backed crypto ETFs. The inclusion of staking adds a yield component without introducing additional market risk. AVAX to trade on Nasdaq pending regulatory approval. If approved, VanEck's Avalanche ETF will trade under the ticker VAVX on the Nasdaq exchange. The product aims to offer investors a combination of capital appreciation and staking yield package in a familiar ETF format. VanEck is not alone in exploring this model. Bitwise recently updated its own spot Avalanche ETF filing to include staking. These filings signal a broader trend towards integrating blockchain native features into regulated investment products. The introduction of staking into ETF design could set the precedent for further funds tracking proof of stake assets. If approved, the VF funds may open the floor for similar offerings tied to networks like Solana, Polkadot, and Ethereum, where staking is a core part of token economics. VanEck's filing represents an effort to meet investor demand for both passive exposure and yield generation within the crypto asset class. The SEC response to this proposal will likely shape how staking is integrated into future ETF products in the US market. That was the article. If you liked the video, then like it and subscribe to the channel for more videos. In the end, I would just like to show you not my analysis of XRP, but the market here, the ETF tracker, and look at this number. The daily volume yesterday was 58.9 million, and you can go by the 589 theory and all that. So make up your own mind about that, and I will see you in the next one.